Welcome to Insurance Insights. I'm Sarah Miller, and today we're joined by financial market strategist David Chen as we dive into the latest trends and developments shaping the insurance sector. Today, we're focusing on the impressive first half of 2025 for QIC Group, a leading insurer in Qatar and the MENA region. The company has demonstrated remarkable growth and innovation despite a challenging global environment. David, let's dive into their achievements and what they mean for the industry. To start off, what's your overall assessment of their financial performance given the current global economic climate?
Thanks, Sarah. The numbers are impressive, especially considering the ongoing geopolitical tensions, inflation pressures, and tighter financial conditions globally. QIC Group reported a net profit before tax of 420 million Qatari riyals, up 17% compared to the same period in 2024, and a net profit after tax of 383 million Qatari riyals, marking a 6% increase. This performance signals not only resilience but also an effective execution of their strategic priorities. Separately, gross written premiums rose by 17% to 5.7 billion Qatari riyals, reflecting strong top-line momentum driven by a balanced underwriting portfolio.
That's a strong start. Speaking of underwriting, how has QIC managed their portfolio in this volatile environment?
They've clearly adopted a risk-conscious approach by focusing on profitable core markets in Qatar and the broader MENA region, which now account for 60% of total premiums. This regional concentration reflects a deliberate strategic shift away from lower margin and higher risk international sectors. This diversification and risk rebalancing have contributed to the 221 million Qatari riyals underwriting profit they achieved.
The investment income also showed strong growth. Can you unpack that for us?
Certainly, investment income rose by 7% to 496 million Qatari riyals, supported by a diversified and high-quality portfolio. Their investment yield improved to 5.2% from 4.7% the previous year, demonstrating prudent asset management amid uncertain markets. Maintaining assets under management at 18.4 billion Qatari riyals highlights their solid capital base, which is critical for both underwriting strength and regulatory compliance.
What recent developments highlight QIC Group's strong balance sheet, capital diversification, and its leadership in the regional insurance industry?
One of the most significant developments was QIC Group's $500 million subordinated perpetual Tier 2 bond, priced at 6.15%. Investor demand exceeded $3 billion, reflecting strong confidence in QIC's creditworthiness and strategic direction. Listed on the London Stock Exchange, this bond strengthens QIC's solvency and enhances capital flexibility, supporting long-term growth in a volatile market. What sets QIC apart is its consistent access to global debt markets, a rarity for regional insurers, highlighting its leadership in financial innovation. It also reflects broader confidence in Qatar's economic outlook.
Let's talk about innovation. QIC launched Qatar's first individual cyber insurance product in this period. How significant is this for the market?
Very significant. Cyber risk is a rapidly growing concern globally, and QIC's launch of an individual cyber insurance policy addresses a major gap in personal protection in Qatar. This product covers a broad spectrum of digital threats, from online shopping fraud to identity theft and ransomware. It positions QIC as a market innovator while aligning with the growing digitalization of risk exposures.
They've also proposed expanding into Saudi Arabia. What are the implications of that move?
Saudi Arabia represents one of the most promising insurance markets in the region, expected to grow to over 105 billion Saudi riyals by 2029 with a near 9% CAGR. QIC's proposal to establish a branch there leverages its existing regional expertise and Lloyd's market access through Antares in emerging Asian and African markets. The move fits well within their Gulf Cooperation Council expansion strategy and should diversify their revenue streams while tapping into a large, underpenetrated market.
ESG and sustainability have become critical factors for investors and regulators. How has QIC performed on this front?
QIC has demonstrated real leadership here. They are the first insurance company in MENA to receive MSCI's triple ESG rating, the highest possible. which speaks volumes about their comprehensive approach to environmental, social, and governance issues. They've integrated ESG into underwriting and investment decisions and established governance committees to oversee sustainability.
Have their ESG efforts been recognized externally?
Absolutely. Beyond MSCI's rating, QIC's ESG commitment has been acknowledged through multiple awards, including being named Insurance Company of the Year in Qatar for 4 consecutive years. Additionally, their partnership with Google Cloud and recognition at industry summits underscores their pioneering use of technology to drive sustainable growth.
What about customer experience and digital transformation?
The group continues to invest heavily in digital solutions, exemplified by their award-winning QIC app, which enhances client engagement and operational efficiency. Their partnerships to expand service networks, especially in auto insurance, show a clear focus on customer-centric innovation. These digital initiatives not only improve service, but also reduce operational costs, improving combined ratios and profitability.
With all these factors in mind, how sustainable is QIC's growth going forward?
The company's strategic focus on profitable markets, innovative product development, strong investment returns, and robust ESG governance creates a solid foundation for sustainable growth. They've proven adept at navigating volatility while capitalizing on emerging opportunities, particularly in cyber insurance and regional expansion. Given their current trajectory, I expect them to continue strengthening their market leadership in the MENA region.
Any closing thoughts on the key risks or challenges ahead?
Regulatory changes, geopolitical uncertainty, and market competition remain risks, but QIC's disciplined risk management and proactive governance should mitigate these effectively. Continued innovation and expansion will be crucial to maintaining their competitive edge.